Joining us now to discuss is Eng Taing, founder and CEO of Tuesday Capital. Hi there, Eng. Thanks for joining us.
Hi, Christine. Thanks for having me.
So you have a really fascinating story. You're the son of refugees who escaped the Khmer Rouge in Cambodia. You played poker, used day trading to pay your way through college, and now you run a private equity firm with $250 million in assets under management. You're a real estate investor, and now you make over $100,000 per month mining Bitcoin. So you're a hustler.
It's in my blood. It's in my nature. I was born in a refugee camp in Thailand, Cambodian Chinese, and I came here when I was 3. So we've always been sort of trying to find, as a family, sort of financial security. And financial security for us has been finding cash flow. And I love finding investments that cash flow, including real estate and Bitcoin mining.
So what's interesting is that you're using Compass Mining. They were on the show earlier in the year when they launched this service for retail miners, and it's done well for you. So obviously, walk us through how that works.
So the way that Bitcoin mining works is essentially you buy these very expensive computers, and then you try to get as cheap as power as possible. And then you have somebody trying to make sure that it's on as much as possible. And the way that it worked with Compass is that they take care of a lot of that. If you buy more, you get better pricing, and you can get really great economies of scale. I got in last year when pricing was pretty good and mining was pretty good, especially when China left. All of us were kind of making a lot of Bitcoin. It's more challenging now, of course, but essentially it's kind of a turnkey solution that I find it very easy for those who without much time or technical ability.
So how do you deal with the ups and downs of retail mining? What about the costs of doing business? And mining difficulty right now is really high. So does that cut into profits?
Yes, it does. And difficulty is all-time high. I see my Bitcoin earnings half of what it was last year. My fixed energy contracts and price isn't cut in half. So my profit margins is less. My profit margins last year was around 80%. Now it's around 60%. So things are getting more challenging. I think 60% is still pretty good. But I do miss the heydays of 2021. But I think from a long-term profitability perspective, typically difficulty has risen when price rises as well, and price rise. So that decoupling has sort of negated in the last 4 to 5 months.
So how much are you making per month now then?
Today's price, probably around $100,000.
Oh, that's still great. I mean, as passive income.
Yeah, it's passive income. I've recouped all my investment back. It's just like any investment. It's about how much are you investing, how much are you earning, what is your acquisition price for an investment, and because it's very passive, and I'm dollar cost averaging. It doesn't matter if Bitcoin's at 30,000. It's at 50,000, 100,000. I'm making Bitcoin. Hopefully, it's at closer to 100. And so, because my cost is fixed, and my profit margins will be higher when it does.
So I wonder, are you ever at a loss because of your expenses or no? And what are you doing with your Bitcoin? Are you ever selling it? Are you holding it, using it for collateral for loans?
So at my current OPEX cost of energy prices, I'm mining Bitcoin around $12,000 to $13,000 per Bitcoin. So if Bitcoin is at 37,000 today, my profit margin is around 60 something percent. So if it goes down more, I would probably find it difficult. If I had older generation machines, so I do run the latest generation machines, and new generation machines are about energy efficiency, which means that your cost to mine Bitcoin is very cheap. But the older generation machines, you're mining Bitcoin at around $25,000, $30,000 per Bitcoin. And at that point, it might become kind of unprofitable. What I do with my Bitcoin is I'm also very deeply in DeFi. I earn yield on it. I potentially take loans against it. Potentially not in this climate environment, take very low leverage. And I'm able to then compound and earn more from it.
Oh, wow. Yeah, you're just continuing to earn compound interest and staking rewards upon staking rewards. And that's really interesting. What about, how do the Bitcoin network upgrades work? Do you ever have a vote as a retail miner? Could you help make the network more decentralized as a retail miner?
I do think that decentralization or centralization of miners is a challenge. As somebody who actually runs a Bitcoin mining company on the side, I have close to 4,000 from 5,000 miners running with Tozy Capital, my company, and Marathon. And I know the guys at Marathon. I know the guys at Riot. I know all these at Core. Bitcoin mining is moving to industrial scale. Pi retail mining constitutes 1 to 2% of global hash rate. I think because you're not going to get the same kind of purchasing power parity, the low cost basis of CapEx, the low energy cost that you can get when you buy 10, 20, 100 megawatts. Right now it's a 1 gigawatt site. They're probably negotiating really great energy contracts. They're probably going to get cost to mine less than $10,000. Marathon is all about getting cost to mine very low cost. I don't think we can beat them. Industrial mining is here to stay. I think decentralized mining is potentially possible. And outside America, I have friends who are mining in Venezuela, and where you're essentially getting very cheap energy, and you're getting a currency that is kind of a great hedge against your local currency. And in fact, a lot of miners in Venezuela are actually getting these really old generation miners that wouldn't necessarily be energy efficient here. Someone like Riot or Marathon would not buy those really old miners, but they constitute a significant portion of the global hash rate, and they're being run in very cheap energy markets. And so I look for the countries outside America as sort of decentralizing it. And I'm thinking that when you're seeing miners running in places in Nigeria, Angola, Venezuela, El Salvador, and by local people, mom and pops that just have a couple $100 to buy one miner, not a couple $1,000 to buy the newest generation miners that produce a ton more Bitcoin. But because their energy is very cheap, they're potentially getting passive income for themselves. So I think that decentralization will happen as sort of these older generation machines, these new generation machines become old generation machines, and then they'll be resold to folks outside America, just like how new iPhones are resold to countries outside America.
It's interesting you think about the energy efficiency and looking at emerging economies to solve some of those problems. But I wonder, what about your concerns about the environmental impact of Bitcoin mining, which is high on the minds of several folks out there who are very concerned with proof of work mining?
There's no doubt that Bitcoin is all about energy equals Bitcoin. But of all the energy that's produced, a third is lost to transmission. A third. So one of the things that is very novel and unique about Bitcoin mining is that you're essentially just needing power. And you don't need to be in population centers. You don't need to be where energy is being consumed. You need to be where energy is being produced. So if you can move your source of consumption of your Bitcoin mining to where the miners are essentially, or where energy is being produced, essentially next to a solar power plant, next to a wind farm, you can reduce your transmission costs. You can reduce those cost bases. So actually renewable energy, it's actually a very cheap form of energy when you get close to the source. And flared gas is the thing. You can essentially, that's these oil wells that are flaring natural gas, and they're burning off energy, and we can capture that energy, wasted emitted energy that would typically just not be used at all. So a lot of Bitcoin mining is essentially using surplus energy, creating and it's trying to find energy sources that are as cheap as possible. Facebook data centers, Amazon warehouse data centers, they need to be online 100% of the time. Bitcoin mining, if you're not online, you're not making Bitcoin. That sucks. But you can be offline for 1% of the time. And in Texas, where there's storms on occasions and energy, if you can curtail your energy, meaning that you're essentially volunteering to shut down for less than 1% of the time, you can reduce your energy bill by close to 20 to 25%. So it's all about number and math in Bitcoin mining, and the economics of renewable energy is very profitable.
All right, Eng, super fascinating. We got to wrap it there. But folks, if you want to make money, do what Eng does. Follow him on Twitter. Thank you for joining us. That was 2Z Capital founder and CEO, Eng Taing. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9.